Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is April 28th, or 29th, forgive me, 2016. It is 9:17 a.m. Eastern Time. For those of you that are here for the first time, welcome. And for those of you that are back, welcome back. Before we continue, let us go over the disclaimer real quickly. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation or website is neither a solicitation nor an offer to buy or sell future stocks or forex. The representations being made that any account will are likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance indicators for methodology are not necessarily indicative of future results. Being that said and done, I'll take a look at the calendar. It is Friday. And we have had, let's see, numbers for the U.S., Canadian. We had PPI numbers. RMPI came out a little bit better than expected, but they went straight out the door in the month-on-month for PPI. GDP came out as expected, or no, less than expected, actually. For the U.S., Core PCE price index came out month-on-month, less than expected. Employment cost index quarter for quarter came in as expected. Personal spending came in less than expected. Personal income came in better than expected. And we're waiting for Chicago PMI and consumer sentiment and inflation expectations. These are always good numbers and they always drive the market. Okay, let's take a look at the market real quickly. Let me see. Let me go to a 10-minute. Okay. Don't have a trade yet on this one. It's setting up, but not yet. So have a little patience. We're almost there. Let's take a look at the US yen. Should be a very, very interesting morning. So give it a minute, and I'll be right back. Okay, let's take a look at this. This is the yen. So it seems like they came crashing down yesterday, and it looks like they're getting ready to go long, not short. Now, why would I say that? That's a good question, isn't it? And the reason why, I'm actually looking for a reason here. This candle basically announced it. This candle announced it. And this candle announced it, but they came and retested. And what they're doing now is actually called a mean reversion. Now, it's very hard to detect the pattern in the candle that you're supposed to identify that would execute this trade. And here, for instance, missed a nice drop, really? What was the drop? Oh yeah, this was a nice drop. Here, for instance, we might be able to see it better on a 15-minute, more so than on a 10-minute. Usually, if you can spot it on a 15, a 10, or a 7-minute, that's usually the drop that would make sense, the pattern that would make sense. The moving averages are just to basically allow you to really just determine if they're really using them as a mean or not. We're not looking for moving average crosses. That's not how the market makers or banks are using them right now. So for instance here, let's bring this up. See, I would have never taken this trade here. I would have looked for this pattern here because it shows an imbalance between the sellers and the buyers in price action. This one here most definitely announced it. This announced a reversal, which did come down, no question. Then here, this announced going long, so did this one. And even this one here announced long. Right now, they announced short, but they didn't go short. This announced long, and that's why they're going long. I actually like this trade to the upside, even though it is right before the open. And I'll explain why. You see how they came down? Let me maximize this. Normally, this one, you would think that they would go short, which they did, but they had already decided to go long. So this is just a small retracement. This one here, you see how it's a small plus sign. It's not even a hammer, and I prefer inverted hammers like this one than I do. Even if it's bearish, it doesn't matter. This tells you there's a reversal in play, just like this one. This one said go long. They retested here, and then they made the move. Here they never came down. They were always retesting this level right here. So what they'll do is they'll do that, and then they'll go to the mean, which they did. They used the 50. This is the gray one is the 100, and this one is the 200. Now, based on what I'm seeing, it looks like they're gonna go long. Now, if they do go long from here, which looks more accurate than anything, that means that we should see the same thing in the indexes, like the Dow, the S&P, the NASDAQ. We're not seeing it very clear on the FX side, but here we are. See here, for instance, this pattern, let me go back. This pattern, this candle right here, and this one are very significant. Why? Because here they throw a lot of volume, and then they stop, and we'll bring in the volume indicator, which is going to take about a minute, and I do apologize for that. It's only because it just takes a lot of data. I mean, actually, let me check something to see how much days in data we have. 46, which is nothing. Okay, so let's go. Let's add that indicator. And power dots. Okay, here we go. Let's give it a minute. But we should be able to identify this trade right now, actually. Looks very solid. The Dow futures to go up. at the open. And if that's the case, then we should see the US yen follow. Now, here's where the magic begins. This is our volume indicator, and it's showing what we call is divergence. Why is this important? Well, it's important because you cannot have this scenario. This concept of volume going up and price action going down cannot coexist. There is no place in logic or reasoning for it. Now, being that said and done, they are using the trend dots as resistance levels, because here they did, but here they haven't. And so here what they did is that with the volume indicator, we're able to see what the real distinction was here. So here they had a tremendous amount of high frequency trading, 1,190 on the buy, 2,061 on the sell. Then this one came in and they held it. They pushed back. Now usually when they do this, there'll be one more move to the downside before it goes up. Why? We have no power dots here. That's why. If we did, then we would have caught that. So this one has 1224 on the buy, 1517 on the sell. It's negative, you know, but it's less negative because you can see it settled higher. Then this one almost settled bullish, but not quite. And that's why you see them pulling back here. So as much as the market is right now on a negative toll, I'd say we still have a shot at this, but it's going to take maybe one or two more candles. This ain't over yet. And as for what they're down for the day, they're really not down a lot, actually. 17,786. Oh, no, they are down. That's 100 points. That's a bad move that took place. They did it at 5:30 in the morning or 8:30 a.m. Eastern time. Now, that's okay. You know, like I said, this trade right now is still good. It's still in motion, and I'm not too concerned about it. Because the one thing that we have is we have patience. We love to wait for them to give us the trigger. See how it's pulling up? Give it a second. Give it a second. You're almost there. Almost. Almost. There it is. Thank you. So, see, I told you when it came down, they'd go down one more candle before they hit. Now we're at the open. So now we're going to see if they actually fulfill and break to the upside. If they don't, then they're going to use the trend dots right here as a resistance level, and then we should see volume come down. But I wanted to see this only because there is still volume divergence, as you can see. Now let's see if they hold it. Let's see if they actually fulfill. Because this is inverted, that's why they push down. This one's inverted, and this one is still inverted, which is not a good sign. So if that is the case, and you do have power dots here on the 15-minute, but we missed it, it was a good drop actually. And they started this one at 6:15 in the mornings when they hit that thing. So right now, you know, I'm waiting to see if they break above it, then I know we're good. If not, then we're going down. And that's okay. You know, at the end of the day, it comes down to one thing: following the trend. We lose nothing by it. I mean, they came up quite a bit, you know, pretty aggressively. But, you know, from 18,000, 17,687, they've dropped pretty much. They've dropped a good ground in 2 days. That's quite a bit. That's why I'm a little concerned about them continuing to be bearish. I don't think it's going to play, but I don't like the fact that this one has a tremendous amount of volume and that it's not moving. and here is the volume. You have 1364 on the buy, 1075 on the sell, difference of 268, but it's still coming down. See what I mean? Not a good sign. Not a good sign. And the point of control is actually formulating right below this previous one and where this one settled at. So I'm not content. Normally I wouldn't take this trade. I would wait for a signal like this because I would retest. And the fact that there is too much divergence here and not enough price action to support the reversal tells me it's not in play, because there's a trend dot that's going to form right there, and if this thing doesn't break above it, which is what I'm waiting for, that's the only reason why I haven't said long. Now, if that is the case, see how they're testing it? Testing it doesn't mean they're going to go below it. Again, we're right at the open, so there's a lot of money coming into this. I mean, the volume in this thing right now is huge. They throw the kitchen sink at the open. 2,197 on the buy, 1,647.48 on the sell, difference of 548, bullish, and it's not doing anything. See, that's what concerns me. That this one, they overdid it and nothing. And so that means sell. Doesn't mean buy. What's my risk? I'm risking for my entry 10 ticks. That's as much as I'm risking. If I'm right and it comes right back down, then we should see this continue to just crumble, because this candle sort of gave it away when they came in with too much high frequency, and they sort of changed the game in that regard. Volume divergence didn't really fulfill based on the direction, based on price action. Remember, I told you, these two concepts cannot coexist with one another. You cannot have volume divergence one way and price action on the other. One will eventually dominate. And when that happens, then you'll be able to really identify who's really in control. Is it the buyers or the sellers? This candle and this volume mean nothing. Literally. They are doing nothing at this particular moment to really drive this thing up. You know, far from it. As soon as this thing closes, it would come down. They're just not, you know, driving it enough. I mean, you have very little volume net, 548, 562. You know, with all the volume that they brought into this, I would have expected them to really just jump through the roof, and they haven't. So even though I may have jumped in a little prematurely, it is really premature. It's very, very minimal. They will probably lose steam. I don't like to give up more than, like I said, more than a few ticks. So in this case, we're just going to wait for it. And the point of control here is pretty much identifying the real intent besides price action, the way it's playing. Just doesn't seem to be the game that they want to play. I mean, it's unfortunate to say, but it's true. You know, you have way too much volume in this candle at the open for them not to do anything. You got 3,261 on the buy, 2,753 on the sell, 54, difference of 501. Look at that. The bears are slowly coming in, and as they're coming in, price action is reacting to the volume, the negative volume that's coming in. It still has bullish volume, no question, but the bears are slowly coming in, and they've held it. You know, you have way too much high frequency done on this. So someone needs to get out of some serious risk before bringing it down. And that's why they're holding it. So someone's buying thinking, oh, it's going to go long. In actuality, it's not. See, we're only down 2 ticks right now, which is nothing. And then we went positive. And what did they do? They used the trend dots as resistance levels. And what will happen if this candle is still bullish but settles negatively, this is the one. And so you have to look for that. Now, granted, they've been using the moving averages as a mean to trade away from. I don't think this one will trade away too far. Maybe another, I'd love to see another 100-point drop, to be quite honest with you. I don't think we'll see it. But maybe another 50-point drop wouldn't be out of the question. And if that's the case, then it should be interesting. But, I mean, just look at the volume. You have, in this one alone, I mean, 37, 33, 33, 25, 33 to 36, and again, we're seeing more bearish volume come in. They still have bullish volume, but those are orders that haven't gotten filled. And so the buyers may be bidding higher than, and the sellers aren't offsetting. The sellers are only going to offset to bring it down. So you got 450, 443, 445 net, bullish. And you would expect with all this amount of high frequency for this candle to actually just pop to the upside. That's why I said once they begin a trend, you have to identify how they're going to use the trend dots. And if there is truly volume divergence, because both concepts cannot coexist with one another, one will eventually dominate. You just have to wait for it. They will give it to you. They will put a smile on your face like no other. That's why I said the one thing that we have is patience. We may have missed a good drop on it, because yes, by all means we did. But at the end of the day, we're looking for a specific result and a specific reaction in the market, even though this was at the open. Give it a second, give it a second. I mean, look at that volume. It's just incredible. Everything they've put into that. And they got 6 more minutes on the candle, but they haven't been able to really just fly. It hasn't happened. Let's wait and see. See, this number here is, even though it's bullish, it's declining. Why? Because the bears are coming in, the sellers are coming in with more orders. So they're trying to maintain it. See, it went from 451 to 446, 447. And it's just maintaining. And they have thrown the kitchen sink at this candle. Everything has been thrown at this candle. And the reaction just has not been the one that everyone expected. I was expecting a much bigger reaction in this candle, to be quite honest with you. $454. We're almost there, guys. Almost out of this one. 460. 466, 469, 478. See, I would have expected much bigger reaction. And then as soon as some slightly negative volume comes in, they pull it right back down. And this is important because knowing how price action reacts to the volume as it's coming in is significant, because these are really, remember, this algorithm does one thing. It identifies 3 components for a trade: volume, liquidity, and momentum buildup. And that's exactly what equals a trade. Without it, we have nothing. We have no trade. So they played the trade to the downside. Now we have to see what their final reaction is. Like I said, I will be surprised if they bring this down significantly. and if this candle ends up being negative. If the sellers come in and really take control and make this a negative candle before the close, it will be very interesting. And it's really not the sellers anymore. Remember, everything is traded by robots, by algorithms. We're no longer trading against men. You know, I think before it was easier. Now it's programmed, and so they're programming these algorithms to actually fool us. Now, here's another thing I want to go over with you. Whenever they make a move like this, they will usually be a significant move, and then they will chop. They'll go up and down, up and down, up and down, and then boom, continue. So what they've done is that they've programmed these algorithms now to do mean reversion, but at the same time to pull liquidity from the market to not continue in that the direction they're supposed to go. And that's basically where they begin to chop, and they try and make people believe that they're actually going to reverse and go long, when in actuality they may continue in that direction and they may continue the trend. And that is to some degree bothersome to see, because, you know, unless you really see it, it just isn't happening. And see, again, we look at the point of control, which is settling below this one right here and this one. And so for me, when I see that, that is something that tells me that their algorithm is changing, because this indicator identifies the price level where the buyers prefer to buy or bid, where the sellers prefer to offer. And the imbalance that you're looking for is between these two candles and where the candle is settling, price action. Now, like I said, normally I would have preferred, I would have said this looks like it's going to go long, but I didn't like the way it came down. I said, okay, we need to wait. We need to wait and see how it reacts. And again, look at all the volume that they've put into this. I mean, they've shoved the kitchen sink. 5,000, 48.59 against 47.34. You have done some 430, 420, 410, 347, 336, 304, 310, 289, 285, 315. So, you have negative volume coming in, and that's what's holding this trade. And see, now they closed right below the trend line, which is what I was waiting for. And now we're going to see what this one does. Because to me, this candle should be negative, not bullish. And if I'm right, and I might be right, I may be a little, Confucius, but Confucius said, better to be right than better to be wrong. Even though he was very confused, and what they've done is given us a very confusing trade, because they're trying to confuse us. At the end of the day, that's what they're trying to do. The direction of the trade was already determined here. They were going to execute it regardless. So they know something that we don't know. All we have to do is basically wait. And here's where they begin to chop, 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 chop before they execute. And then suddenly, the magic begins. Now let's see if they really execute all the way. Because we would really need it to come down another 18 points. And if it does exactly that, then that means that they should continue. Now, if they don't break below 17,678 or 79, then at that point we should be exiting. There it is. I'm looking for them to break below, 16,677 is where they should really just hit someone with a club and beat them severely. Oh, let's see. And see, now we do have an imbalance. The buyers want to buy out here, but sellers say, no, 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 we're still going down, down, down. Now we got 20 ticks in our favor. This should continue. Like I said, Sometimes you just got to wait for it. After an initial move, they will try and confuse you. They'll pull liquidity and go 1, 2, 3, chop, 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 and then continue. And that means that the next move should be more or less the same. But again, we need this to really come down further. If it does, and I feel that it's going to actually come down further. It's one of those trades where they're just making us wait. Now, if they don't break below, then we'll take profit and we'll get out. You know, we'll be very simplistic about this. We don't like to challenge our luck. Sometimes it's, you know, it is what it is, but I feel that they're going to go right through the floor. You got negative orders coming in pretty aggressively. Here is you got 1228 on the buy, 1638 on the sell. You know, more negative orders coming in, 450, 449, 428 on the negative side, 425, 440, 438, and they broke through 77. So for me, it's just a matter of a moment before they really kick someone and just boom, mobilize. Now, when you're trading this, you know, we're already up over 20 ticks. You know, on a move like this, in the morning, you should be looking for a 30, 40 tick trade. I think this is it. This is that 30, 40 tick trade that we're looking for. Let's see if they give it to us all the way. We got it at 695. It's at 667, 666. So that's 30 points right there. And keeps going. Let's see how far it goes. That's the beauty about finding the right trade. Keep going. 664, 63, 61. Break below 660. Make it a nice even trade. Come on, keep going. Don't stop. 658. Oh lordy. And there's our 40 points right there, almost there. Come on, go to 55 and make it 40 points. No end in sight. Now, we don't have 40 points. Well, we have actually 39 points, 38 points. And they moved, you know, a little close to 50 points actually. I think at this point I don't really have much more to prove in this regard, regardless of whether it went down any further. And you can hold it. I mean, you know, it looks like they're going to continue. Like I said, the imbalance, the fact that the point control settled way below this here is significant, and the fact that the sellers continue to push, the buyers are unhappy about it, but the sellers don't care. They're still driving this thing. I mean, they're really pushing it. You got 905, 895 on the negative. You know, like I said, 40 points. A 40-point trade is a 40-point trade. You know, at the end of the day, it comes down to two things. Can you live on finding 40 points on the Dow every day? The answer is yes. On one contract, maybe not, but you know, if you put 2 or 3 contracts, yes. And the same principle applies in any other asset, you know, that you're trading. At the end of the day, it really comes down to, you know, identifying the real direction of the trade, even though it already occurred. And normally I don't like to get into trades once they've occurred, but in this case, it's become very simplistic, and their mistake has become very notorious, that it's hard not to take advantage of them. That is the beautiful thing behind Phoenix Trading Strategies right now. that it's very hard not to take advantage of them. So we're going to finish with this trade now, take it off the table because I don't think they're going to give any more. And if they did, it really wouldn't matter. At this point, we've proven the theory in play. And let's see, are you going to make a move? If you're going to make the move, then make it now. If you're not, you're really going to make us upset. No, they're not. So we're out. We proved what we needed to prove even after the trade. I mean, if we would have been able to get from here to here, 17,764 to 17,660, that's a 100-point move, you know. No, 17,764 to 7, yeah, that's a 100-point move. So that was that would have been a beautiful trade, but we couldn't. So now we go look for something else. Let us take a look at let's take a look at the pound New Zealand. I know everyone wants to look at the US CAD. We can go look at it real quickly. Bottom line is that mean reversion is the strategy that they're using. Now it's about defining the entry points, defining the indicators on an interpretation of them in order to catch those trades, and then basically executing the trade. If you can do that, you win. This is a very systematic, logical, consistent, and rational way of looking at the market. When you understand what they're doing, but when you don't understand what they're doing, then it's better just stay away. So give it a minute because the volume indicator is the one that is taking its time right now. I want to see what that US CAD has to say, and we'll probably find one more trade. I always believe that there's always one or two opportunities in the morning. Ooh, okay, this is going to be interesting, and here we actually may want to go into the smaller time frames, because what did they do here? They formed a power dot level here. Now, what's the beauty behind this? Mistake number one. So this tells us long. Now, what did this do? It broke above the trend dots in one candle. It went from 125.03 to 125.27, which is a big move. Now, here there were power dots, and this is where they made that move. But this was the one that said go long. Even though we're late in this trade, because we are, this thing is going to go long, and they're going to really move significantly. As much as I hate to get into trades after they moved, and I think that in this case, when you're trading this pair, the pound New Zealand, the US CAD, not the pound New Zealand, it tends to react pretty aggressively based on what crude is doing. So I think I would like to wait to see what this next candle is going to do, even though this one in 5 minutes did a lot with very little volume. And the reason why that's a good thing is because whenever we see a reaction after this one said long and this one said we're really going long. That's really what's happening right now. Again, it's one of those trades that they're reaching a resistance level. See right here, this is the one that pulled the trigger to the downside. This candle right here. And they did it right off the trend stop, which is an ATR level, and right off a moving average. Here, they went right back to it, and this is what's called mean reversion, when they go right back to the mean, and they'll eventually surpass, break through it, and just run amok. I don't like getting in late in a trade. It bothers me. It really gets under my skin. I would tell you that this one's still going to go, and if you're going to get in, then do so knowing that you should not risk more than 10 pips, period. Why is this trade more valuable than the other one that we were looking at? Here they used a trend stop to actually react. They came and retested And usually the third candle is the one that does it, and you have this type of reaction. It's a beautiful trade. God, it's it's like a gift from heaven when they pull it off. It does this type of reaction. It's an inverted flag. It's like a golf club, right? You're on the green and you're playing golf and you're about to hit something and that ball's just going to fly. And it reminds you of a market maker, a specific banker, and you're like, why? This is why. So at this point, based on the reaction here, it's a good reaction. I like the way that it settled. So long as it maintains itself above this level, 125.22, I guess I'd be content, because it's broken above all these points of control here, and it's come here. Now, you do have power dots here, so can't deny it, but it looks like they're really going to, and they've been at all-time lows on this. I mean, they're really pushing the level. So crude must be collapsing right now. And I don't want, like I said, I don't want to let this trade go quite yet, because I know the risk that I'm taking on this. We're down 3 pips, 4 pips, which is nothing, but still, it's the principle of the matter that you shouldn't really go look at another trade until you've finished your business with the one that you're currently in. Unless you have multiple charts open and you're looking at different pairs, then at that point, then I'd say, okay, go for it. But in this case, I'd say wait, hold, don't do anything, relax yourself. This trade, could be, they've been moving the CAD really aggressively. When it moves, it moves. Right at the open, they pulled this trigger here. And let's take a look at this. Where was the trigger here? Because this is important to understand. Now, they did it here. This was one at the end of the day. They came retested. Then they did it here. This wasn't the one. This was the one. And then they did it here. Finally again. And this was very late before they came down. See, now we're positive. And if it breaks right through, it's coming all the way to this moving average, which is the 200. And again, the way that they use moving averages versus the way that we use moving averages is completely different. We've just figured out that they're using them as a mean for their, for their trade. And that's the beautiful thing behind it. But more importantly is that we have the indicator that identifies, number one, the support level where they're going to hit it from, and number two, let me try and move this here. No, really, you're not going to move. Oh, great. Is that we can identify this trade, especially if we're going to trade on the power dot. That's the little thing behind it. And in this case, this was meant to support this level right here that they were going to go long. So they're going long. So now it's just a matter of being patient and letting them, give us what we're looking for. I think they're going to have a little bit of trouble breaking above this level here. There's a pivot at 25.42, but in reality, it's right here, 25.41, where they're having a bit of an issue bidding and settling trades above that. Now, the volume is bullish, but the reaction is, at this point, holding. And I don't like the trend stop here. This bugs me because it didn't break above it, so I need this candle to break above this trend stop. And if it does, then we're bullish. We're so bullish it's not even funny. This candle proves that they're really, really upset at the sellers. I mean, in one candle you have 36 pips. That's significant. That's very significant. Now let's see if we can pick up a few more. And again, after a move, like here, see how when they came down, they chop, and then they went. For all we know, they can go up and then go chop, and then move. So long as they do it above our entry, I'm all for it. They can take their sweet time. And there it goes. 25.42, 25.41 are very significant for us because of those pivots. You have one here, and you have another one right here which was having trouble. They just broke through it. So this is the one they got to really, really run above. And then the next level, as you can see, nice trade, we're in play, is here at 125.51. Now again, we got in late, and I don't like getting in late trades. I've told you time and time again, it's not a good thing unless you know your risk and you're determined to basically just, you know, to take risk on. Then it's on you. It's on no one else but you. So I want to emphasize that because I don't want you to blame anyone else but yourself. The software is not going to lie to you. The software is going to tell you the truth. You may lie to yourself. That's a whole other thing, you know. But the software doesn't lie. Numbers don't lie. This adds up. It's pure mathematical reasoning. And see, while all these other dummies are talking about, you know, order flow and this and that, and oh my God, you need to look at order flow and price action. No, you don't. They're not doing that trade, you dummies. They're doing another trade which is called mean reversion, and it's just a sad, sad moment for them because they look, well, let's just say they just look wrong. How's that sound? Isn't that a little better? See, they had a real issue here. I have an issue that they had an issue here, not breaking above it. But this candle should move, because after one like this, there's usually one more that just boom, pops. One more that goes, and that's the final one. But if it doesn't go, then it doesn't go. And we're already up 10 pips, 11 pips right now on this trade. And sometimes it's better to take what's on the table if you're not going to see the reaction that you're looking for. And I'm not seeing the reaction that I'm looking for. It's actually upsetting me. I'm not enjoying my coffee as I'm doing this. And so they say, Kimosabi, take what's on the table. Don't let it go negative. Let's see if they do one more push. Nope, not. I'm out. That's as far as I go. This candle, the way it's reacting right now, if price action closes below this point of control, the reversal is imminent. And I'm not willing to be in that position. I didn't like the spike and then the pullback. This is dangerous. Whenever they do that after a move, and sometimes they will do that because they did it here, they could do it here. And they're doing it right at the moving average. See? That's why I said get out. Because when they do that, and and they're forming a trend stop just like they are here, I would wait for this one because there's going to be another candle. This is just telling you that they're planning on doing the reversal. So sometimes it's better to just stay out of the game and wait. Wait. Patience is a virtue. They have patience too. Nice. Very nice trade. I made 30 pips. That was a phenomenal trade. Now I'm going to be writing up the rules for this strategy, and hopefully you'll be able to follow them. But now I'm bored with this, and we need to go find something else. Let's take a look to see what the Dow did. Let me remove the volume indicator because otherwise we will take forever in looking at it. So far we're 2 for 2. Can't go wrong about that. Give it a minute. I'll be right back. Wonderful. We're back. Okay. God, I'm really tempted to short this thing. But I promised myself I wouldn't do it, you know. But it looks so good that it could, play out. Now here's the thing, from where it's trading, 535 or 536, I'd be risking about 10 pips. I could, yeah, and it looks solid. It really does. It's one of those that, should we not? Should we not? But don't let temptation fool you. It's very hard to, to fall into it. Once you've beaten them, sometimes it's better to just wait and be patient and not pull the trigger. Let's take a look at the 5 on this one. Maybe the 5 is telling us something that we're not, but I'm just not sold on it pulling back completely, because normally they do the pullback is usually on a 15 or a 10 minute, and then after that, that's where it's completely confirmed. If you can find that same confirmation in a higher time frame in a 60 minute, a 30 minute, that's a 2-hour trade, and you know that you've got them. And so that's why it's important to use multiple charts. I'm using one chart because, can't teach you any other way. But the software doesn't lie. The software don't lie. Now, can you believe it? They're asking me to go to jury duty. They're summoning me to report on the 23rd. I really don't care to join them, to be quite honest with you. So I'm going to tell them that I'm not interested and mail it back. Oh yes, they did. Look at that, and they formed power dots. Ooh, that was not good for them. What a no-no. So yeah, this looks like it's coming down. And it would be the second time, the second power dot formation to the downside. We should have gotten in when I said go short. We're a little late now. It bugs me. Now here they could come back up and retest. Okay, so we could have a second trade here to the downside. This is where it's going to become interesting, because if they come up and retest and fail miserably on the retest, then we take them. Now, if this candle goes down, then we go down with it. So normally when they do this, they'll come up and retest, and it will not be higher than this, but it normally will be around here, 125.38. They will use the wick to retest. So if they do that, then we're going to just let them have it like a hammer. It would usually be right there. They'll never go all the way up. They didn't go all the way up, but they came up close. So let's give them a chance to prove themselves one more time. Ooh, they're not going to. They're just going to come sink. See, I can take this trade right here and know that I'm risking 5 pips, because I wouldn't be risking more than that. So I'll take it. This is as far as I'll risk 5 pips. If they don't run, then I'm not losing, because that's what we more or less took out in the first trade on this one. But if I'm right, they'll come back and play it really nicely to the downside. Now here's what I don't like. See the trend dots right here? We need a candle to really just break right through it and come right back down. But more importantly is that I want you to look at the mean. See how they use the 100? Not the 200. The 100 is right smack in the middle of the range between 124.99 and 125.45. Right smack in the middle. So these three moving averages serve that specific purpose. Now, here's your problem, finding your trigger. Number one, you need the power dots. Number two, you need to see the reaction of the candle, which we're having right now, and that's such a beautiful thing. And we should see it come right back down up to 125.21. So that'd be a nice 10 pips again. And then number two, you got to know when volume and volume, liquidity, momentum have come in, and for that you need this bad boy, the Phoenix volume indicator, which actually serves as a profile indicator as well. And we'll look at the volume profile just so that you can see why ours is much better than theirs. Everyone's using the wrong formula except us. So let's pull the trigger. We're gonna have to wait about a minute, so don't cry. It's almost there, almost there. Just gotta wait for it. We're almost there. Give it a minute. There it is. Awesome. Oh, beautiful. Boy, they just hit someone and it came down. They're really looking to punish people severely. What a nasty environment. Now, the fact that it broke moving average number 1, the trend stop, which is right at it, the trend dot is a great thing, but we still need it to come down more. This isn't enough. I don't like the fact that both points of control are right here because it could reverse, see? So we need a swift reaction and it has to be pretty significant. Now the volume profile here doesn't tell me anything. It just says red, and from where it's trading, and that doesn't give me a numerical value. I need to see numbers. I need to see that what I'm looking for is, in actuality, what I should be looking at, which in this case is this candle closed with 63 million on the buy, 70 on the sell, difference of 6.1. So it was bearish, still have power dots, which is good. This candle has to be the continuation of, and in actuality, this is what I'm looking for. I'm looking for continuity in price action and volume divergence. And if they're both in the same direction, then we have the winning trade. That's the one that makes the most sense. So that's what we're waiting for right now. It looks good so far. We're up 5 pips. I'm looking for a 20 pip trade here, that we didn't get in the previous one. And that pivot told us get out, which we did. But we still made something. We could have made 10 pips, but we got out with 5. So again, we're right back to the same level. And again, don't get discouraged when they do this flip-flop, flip-flop. What they're doing is basically just range trading, consolidating, and they want you to get out because the decision's already been made for them to come down. So they don't like to share their money. Imagine that. They're very selfish in that regard. So let's give them a minute. I'm usually willing to give them the benefit of the doubt. This candle just started, so let's see what type of volume it has. 60 million on the buy, 48 on the sell. Oh, 53. 62 on the buy, 65, 54 on the sell, difference of 11 million bullish, but it's not reacting bullish. Every time the sellers come in with slight volume, they react to it more. That's where this indicator becomes very key. See, this one doesn't tell me anything. All it tells me, oh, they're, know, they're more bearish than bullish. That doesn't mean anything to me. I need to see numbers. I need to see the numbers as they're coming in to see who's dominating. Is it the buyers that are dominating, or is it the sellers that are dominating? And in this case, it's the algorithms that are dominating. The algorithms have already decided the reaction to the market. Now, we should have had some numbers come out, which should be consumer confidence. So let's see. You had Chicago PMI that came out negative. You had consumer sentiment that came out negative. And you have revised inflation expectations higher by a point. That's not good. That's actually very, very bad. Now, we didn't wait for the numbers, you know. We didn't look for the numbers to take the trade. They set up the trade for the numbers. They knew the numbers that were coming up. So they came back up and retested. See, now we're up almost 10 pips. We're up 10 pips. More now. See the trade? And if I'm right, they're going to trade against the mean, which is the 100 and the 50 instead of the 200, and that's going to come all the way down, you know, to 125.02. So come and do the deed. Make us happy, put a smile on our face. We want to smile with you. So are there any questions on what mean reversion is? I'm sure you have some. You know, I'm actually thinking about giving a webinar on that. For those of you that have the software, for those of you that don't, I'm going to charge you because it ain't free. But I promise it will be the most interesting, most educational, most enlightening, most rational, and logical explanation that you've ever heard in your life. See, I want to make more than 10 pips on this trade. It's really bugging me that they're not going down further, and they're playing around the mean right here. They know that this is my point of anger. Not weakness, because it's their weakness right now, because now I know the trade that they're playing. But since the news was so bad that it has to react. You missed the second one, really? Oh, that bites. Well, you're up a few pips. You missed it. The entry was really bomb. Well, we got it. See, now we're up 12 pips. Come on, collapse. Make it happen. And they just broke below this pivot. See the pivot right here? So the next one is down. I mean down. Now there's some power dots here, but there's no pivots here. So that means it's got to come down all the way to 125.02. Now here, see how the trend stop is forming this way? It'll flatline. So that means that this will probably be where they come close to stopping at 125.07. And I'm okay with that. If they come down another 10 pips, believe me, I've got a smile on my face. So come on, give it up. Bring it down. Let me bring out the volume indicator just to see what their volume is. 64 on the buy, 66 on the sell. Ouch. They're holding. They're holding, but they got to break below. I know it, and they know it. See, when they do this dramatic move, it's like, you know, ping pong up and down. No, I'm not. Yes, I am. No, I'm not. Yes, I am. It's really to really get your emotions going. Don't get trapped in an emotional trade. They have to play out the trade. It's already been decided. The program cannot do anything except execute what's already programmed to do. You and I can, because we let emotion get in our way. So you have to be careful with that. See, it has a little bit bullish volume. And again, they did come down to the mean. So They didn't come down any further. I don't like the way that they've been playing this trade and the fact that the point of control is here and that the bulls are coming to control here. This bothers me. It came up too fast. So at this point, I'd rather just take the 10 pips that I'm in already. And let's see, maybe they'll shock me right now. I was just about to click out. Yeah, see, it's just not giving more. I have a problem. There's no pivot here. I haven't identified a pivot here. There's one here, but they broke below it. You got 3 minutes left on this candle, and I would need a swift reaction to the downside on this candle in order to continue to believe. And if they're not making me a believer, then, like I said, sometimes you just have to move on. Now, we would have picked up 20 pips by now, but we didn't. And usually they'll move 20 pips and then chop before they continue. So I think at this point, we pretty much need to just get out, walk away. They move 20 pips. They'll usually chop, 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 or they'll use this as a support level and make the move up. I'm not willing to take that risk any further. Sometimes it's better to walk away, to take what you can. The morning is very confusing because there's a lot of news that comes out, and they like to play this. They like to play this level, which is very distracting. When they do so. Let's see. I had a feeling they were going to drop conniving dogs, but they're not going to drop too much. And I only would have picked up 3 more pips, which isn't enough to really put a smile on my face. I mean, if it drops 10 pips and it drops 10 pips, it is what it is. Let's go take a look at something else. We're 3 for 3. Can we be 4 for 4? Good question. Good question. Let's take a look at the Dow, actually, before we look at any other trades. I want to see what the Dow is doing. Give it a minute. Okay. Okay. Now it gets interesting because now they did come down. We saw them come down. We got out. They went back up. Now, looks like they're getting ready to come down. See this reaction right here? And I would actually sell it. Why? Not because of the volume profile. It doesn't mean anything to me. That's just a distraction. The only reason why I would consider selling here is the point of control is up here. They settled below it. The separation between here and here is significant, and you can see the reaction to it. When you look at the volume in this one, what do you see? 1331 on the buy, 1315 on the sell, terms of 16, which is nothing. Here, what do you see? Very little volume, 18 and 72. Bullish candle with bearish volume. Not a good sign. They're doing it right at the trend stop. No pivot. This doesn't mean anything because this is basically showing you this. And so what we're having is the reaction. Now, if I'm right, then this thing should break below 17,646. That's another 10 points down. If I'm right. And if I'm right, then that means that they will come right back down and retest. Let's see. Let's put them to the test. Let's put theory to the test. They've already pulled away from the mean, from the moving averages in this case. So now, it's just a matter of them basically continuing the trend. And remember, I told you that once they move, they'll chop. They'll go range, chop, 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 and then boom, hit the trade again. But we have the pattern is what I want you to get your head in. It's the pattern. And then if you confirm it with volume, then you win. Because then you have them, they don't have you. So it's very fortunate for us to actually change and click to see this trade react the way it did. You know, we're up, you know, a few ticks. I'm looking for 10 ticks on this one. Actually 20. I'd be happy with 20 to be quite honest with you. But we just have to be a little patient. Volume-wise, I mean, look at all the volume they put into this. It's still negative, okay? 896 on the buy, 972 on the sell, 1,000 on the sell, 1,009. You got 96, 97, 94, 91. You know, they were reacting to bullish volume, which is not something that I like. They're bouncing right off of the trend dot. But sometimes they'll come back and retest. And that's usually the case. I'm not suspicious of that, but I'm not willing to risk more either. So I know what my risk is when I'm going in. In this case, I'm not risking more than 10 ticks. I didn't like the reaction they had here on this, and I probably, if it doesn't come back down, which I feel that it might, just not yet. They're playing this, you know. Yeah, see, that's 10 ticks, and I'm not willing to give up any further, so it has to come down. If it doesn't come down, then I'm out. Ooh, not a nice imbalance. Nasty little imbalance. The sellers here, the buyers are here. The buyers are in control. This tells me that they're thinking of reversing, but not yet. It's in play or in motion, and I may need to reverse. I just want to see how they react. Sometimes they'll retest and come back down. And again, if they do that, they'll do that off the trend stop. But if not, then I'll be the one that will be reversing. Yeah, they really threw the kitchen sink at this. Yeah, I didn't like that reaction. I mean, the candle settled, but I didn't like it. It settled below, but this candle is going to be definitive. So if it doesn't break the trend stop, and there's a pivot right here, then it has to come back. So we'll see. Sometimes what they'll do is that they'll come up and then they'll make the reaction in the third candle. That's why I'm being a little patient with it, and I'm not getting out because, as you can see, they'll set it up that way. And what they'll try and do is induce traders to go long when in actuality they're looking for the reversal. It's already programmed in, but in this case, I may need to jump ship. Let's see. Let's see, the volume is okay. There's negative volume coming in. We need to see price action react to it. If we don't see a reaction to it, then there's something wrong. No, the reaction isn't good enough. Now this candle just started, so I have to give it the benefit of the doubt in the first 2 minutes. Let's see if they pull it off here. If this one reacts the way this one did but is negative, then this is our trigger. This is usually an announcement of the trigger. Even though it's bullish, it's the way that it formulates, that it announces the trade is coming. Sometimes they'll execute it right off the third, and sometimes they'll wait for a fourth or a fifth one to execute the trade from. So it's just a matter of being a little patient. You can see the sellers have come in to drive it down, but now the buyers are slightly coming in to bring it back up. We'll see who takes control. still haven't made a judgment call yet on who's, the sellers have defined this trade already early on. So now it's just defining really, are they really going to continue or not? And that isn't set yet. Let's give it a little time to unfold. Now, remember, when you're taking a trade like this, there's a 20% chance it could go against you. Why? There's no power dots. The only thing I liked about this is the trend stop that was coming down, but they ended up reversing. And again, let's see. They came in with quite a bit of volume, but I don't know if it's going to be enough for them to buy it up. At this point, my trade to the downside is questionable because it's not going to play, and they bounced right off the trend dots, which is not a good thing. So it looks like they're going to drive it up and bring it right back up. I had to reverse it. They're going to break above this, and they're going to come. They'll come straight to the 100, which will be 17,729. And you can just, this candle sort of tricked us because it came down and then it came right back up, and it's the way it settled up, which is what bugged me. Normally this candle should be bearish and continue the trend, but if it bounces right back and it does this, and there's an imbalance between buyers and sellers, and the buyers are in control, they're buying it. I was just hoping that on the second candle they wouldn't pull it off, but they did. On the third candle they wouldn't pull it off, but they did. So they're going to drive it up. I'll recover the 8 pips that I went negative on right now, and come out with another 10 or 20 ticks to the upside. That's why I say sometimes you just gotta wait. That third candle is a doozy. It's significant because they will play it. See, now you have a pivot here. We're up 7 ticks, 8 ticks. They're gonna play it. They've already broken this pivot here. The next one is here at 1707, which is where the moving average is. Any questions? This would be the moment, guys. Now, if I'm right, this thing should come up to 17,755. See, we recovered, and we're positive now. Here's the pivot that they have to reach 17,704. They got to break above 17,700. And they're having a really hard time doing that right now, and there aren't any pivots here, which is bugging me. So, do I stay or do I go? Didn't like that reaction. I think I'm just going to give it a minute. This candle has has 2 minutes left. Let's see. Give it time. Let it evolve. Letting the trade develop, but sometimes it just doesn't want to kick anymore. We've been here before. I don't like the way they're reacting off of that 50 moving average. So I may just take it off the table. I need to see a swift reaction here. They got to break above 17,700. They're right there on the edge. They're having a really hard time with it. And I'm having a hard time with it. Second attempt. Okay, you're right there. Come on, let's go. For the 17,705. Come on. Keep going. Almost there. Nope. I'm out. I didn't lose. I won, and I recovered what they took from me in the first trade, or in this last trade. So we're four out of 3 so far, not bad. Let's take a look at the USC and see if that one's doing anything that we should be considering even looking at. So hopefully you've learned something today. Now, for those of you that have questions, you can email me, ricardo@phoenixtradingstrategies.com. You can call me, 818-431-1357, or you can Skype me, and I'll just type my Skype in. And that's it. Let me repeat this. So this is the US yen. See, the US yen, this one they played short. They're not playing long. They did it here, came down. They did it here, and looks like they're going to come down. Now, knowing this, your risk here would be no more than 5 pips. That's all I would risk on this trade. I wouldn't risk more than that. We've done 4 trades, trading in between this range, and they have already started pushing down. See, God, I hate missing the entry. It really just gets under my skin when that happens. I miss the entry. Now, if I'm right, it comes right back down to 107. So another 25, 26 pips. But we missed the entry. I don't like to get into trades that I missed the entry already. Let's see if we find something else. Let's go look at the euro. The euro's always interesting at this time of the hour. They always do something foolish, and we like to catch them doing that, even though it has been treacherous, that in the pound dollar. I'm trying to steer away from them as much as possible. Let's give it a minute. We're almost there. Ooh. Now you see this one is set up to go along, and it did, but they stopped it here, came down, and now, depending on how this one plays, because there's a pivot here and they've been range trading, we could see a mean reversion right back down. I don't like the trend stop going up the way you see it here. See how it shifted? You know, the moving average to the upside, but that doesn't mean anything. You know, everyone looks at the moving averages differently, and the way we interpret them is not that way. That just doesn't fly. So I'd say we have to wait. They say patience is virtue, but boy, they really put it to the test. Let's wait. This would be the last trade of the morning, if it plays. I'm not saying it's going to play yet, but it looks like it might, because they haven't been able to break above this, and you got negative volume on this thing. So I'll place an order here. My risk, 5 pips at this point. I won't risk more than that. Let's see if I'm right. This third candle, this candle right here, should be the reactant to it, but we'll see. Like I said, I'm not risking more than 5 pips on this. That would be max. And I will not give it more than this in these 5 minutes. If I don't see the reaction that I'm looking for in these 5 minutes, I'm out. We're at break even again. We're down 1 pip. See, they've come back, come up, come back, come up, come back, and they're not really going up. Back at break even. Yeah, they've done a lot of dancing. Usually that's not a good sign. Believe me when I tell you. That means they can react either way very drastically. But in this case, it looks like they've played themselves out to the upside too much. But I don't like it. It should have played by now. I'd rather just scratch it. I don't have enough information. See? Started to go back up. Give me a minute. I'll be right back. Yeah, see, I didn't like the reaction that they were having. Not the type of one that I'm looking for. So sometimes it's better to just stay away from the adrenaline rush. I think that we've accomplished a lot today. So we're going to call it a morning. I will see you guys Monday morning. Thank you for joining us here at Phoenix Trading Strategies. We will post a video up later today on YouTube, and then we'll send out an email. Alrighty. Thanks a lot. Have a great one, and we'll talk to you very, very soon. And if you have any questions, feel free to email